Price ratio of fundamental analysis. Stock price ratios help determine if a stock's valuation is justified based on its fundamentals, but more specifically, if the stock's market price matches its fundamentals. It is possible to discover this by comparing the company with its direct competitors and the industry average. EPS earnings per share. The profit of a company is divided by the number of shares available. The profitability of a company is determined by its earnings per share. PE ratio. Comparing EPS to a company's share price is a key valuation ratio. Stocks with high PE ratios may be overvalued, whereas stocks with low PE ratios may be undervalued or ineffective investments. Measuring a company's PE ratio is more comprehensive than its earnings per share. PEG ratio. Based on an annual earnings growth rate per share, a company's PE ratio is calculated. PEG ratios are based on PE ratios but consider an organization's growth. Overvaluation is indicated by a PEG ratio over 1. However, investors should keep the industry average in mind when comparing securities. PPAB is a price-book ratio. The current market price of a company is compared with its book value. A ratio of under 3 is considered a reasonable valuation, while ratios close to 1 indicate undervaluation.